What's going on, guys? Time for a little bit of a recap. Finally off the chemo, finally feeling a little bit better with the chemo treatments and cancer. So to hop right into it today on the cues, we had a beautiful algorithm set yesterday pre-market, which we had played coming into today. We gotta stop blowing that up. And let's get into it here. So drop to the 5-minute here. The default. Must have deleted the fib, but I'll do it again. Boom. Okay. So this was the Fibonacci range that we were working with today. Let's make it real pretty. There we go. Nice and easy to see. So we had an algorithm yesterday pre-market, and that high-low 100% fib, you just take the high-low of that 5-minute candle, push it back up, and whatever way you draw it, you look for that continuation metric, right? So we had this beautiful almost 1618 push and fell back down. And what do we know about Fibonacci's, right? The Fibonacci box is here. It's our high-low, right? And we call this the golden pocket, above or below the 50 fib. And the rules state if we are over the 100, we can generally get to the 1618. That would be a target, right? T1, target. And if it breaks back down into the 100 fib and it cannot progress to the upside, it will come back down to the golden pocket, right? So the golden pocket holds beautifully, might I add, after the dump. And I said everybody to stay short yesterday. So once we were inside the 100 fib, we're going to come back down to the golden pocket, hit, popped a little bit, and gave us the full fib retrace. We called the absolute bottom off the 0% fib today. So we longed it here, and we said there is absolutely no such thing as resistance. It is going to go straight up, okay? And it will have an opportunity to refill that entire Fibonacci range. Cool enough, right? So after something breaks down the price action of the 100 fib, hits the 50, does its bounce like it did in pre-market today, and comes all the way down to the 0 fib, this is a completed fib, okay? That whole fib range has been utilized for the first time. Okay, so we're talking yesterday's algorithm. Once it broke inside, all of these ranges needed to be tested to the downside because of this algo candle. Okay, and we had that at the 0. So it was a pop to short play, and I wanted to lean macro towards the short side, but today I wanted to get a bounce at the 0 fib because it was the first tag, right? So generally speaking, we'll hit a 0, we'll come all the way back up, and if we start going over the 50 fib again, we will come right back to that 100 fib again, right? I know, crazy to think, but it happens. It does it. That's what I wanted. So all the way back to the 100 fib and consolidation. Now we have some big data coming out tomorrow. We got FOMC, so on and so forth. So not to say this rip rally is going to hold, but we did hit some very big markers. This is a standard deviation weekly. This is a standard deviation daily on a 1-year time frame. So also, not only did the algo right here come back down and tag that little guy, we did have that support coming into today and killing it pretty good. So we did a pretty solid day today. It was about 7,000. And that was purely off the long bounce of the Fibonacci. And I wish I had a more in-depth breakdown here, but what are we going to look for tomorrow, right? So as far as the Qs and the FOMC go, we had utilized the algorithm range. Let's go to the SPY quick. And we had this beautiful pushback up on the double gap. And the other scenario we had is the gap that was double filled on, or double unfilled on the daily. Right? So we had this beautiful triple gap this morning. And what I mean by that is for 2 days on the daily chart, this gap was ignored at 511.77. You can check your daily chart for that. And if we started the price action I said this morning, if the price action starts above this gap level, we will come crashing down into it and magnet down. So we had a little pop to short this morning we took. That was the first $1,500 trade. We filled that gap and left it, and then ended up holding that 200 and consolidating. And we said, well, the over-unders are, it is what it is. No matter what the over-under is, the over-under. So if we're looking at SPY's golden pocket right here, the over-under is still going to be the golden pocket. You notice the fibs right here, right? Same jam. This is the golden pocket. If it cannot get under the 0% fib right here, it will retrace, right? So golden pocket, up, low, up to golden pocket, up, consolidated the golden pocket, decided to break out. So then you will be looking at what? The final retracement to the 100 fib, right? So you look to your left, you're like, oh man, we got a 100 fib right here, and that's going to be pretty magnificent to hit if the 0 holds. So once the 0 holds, fib is completed. Same thing, obviously, on Qs, all the way back up. And then we had a squeeze fest at the end of the day, broke out of that. Because obviously, if you were not short and you're chasing the short down, you're going to get kind of, smacked here. We had an easy red, double gap day. And then we had a really interesting red candle that just kind of floated. And then we had a low-sided push back up. And this gap right here was the initial gap on the daily chart for SPY. And this is what called the bottom of the market. And I'll show you guys this one real quick. So gaps are extremely important to me. This is the multiple gap. This is a small one. And there's a gap right here from 315 to 318, right? The overnight weekend gap. So I know, change this right here, that I can go in between the gap and fib from here to here. And I'm fibbing the gap range, right? And this morning, this will give us a support bounce on SPY. And let's see. And of course, 2618, perfect bounce point, right? And once a Fibonacci is completed and kicked out, well, it is what it is. We got the fill today. So this is the gap. Here's the box, right? Once we have extensions down, first target 1618, second target 2618. So you can see how that short worked out pre-market. Washed it, 1618, washed it, 2618. This is a high probable chance of retracing back to the 100 and all the way to the fibs once the 2618 has been completed. So the gap down, which was not filled, was the algo data for today, right? And once it hit the 261 retracement, that was the pop. And that's another reason we called the bottom. We had multiple instances of multiple supports at those levels that we needed, and everything worked out really well. So as far as the next day is concerned, we have FOMC. We're not going to press it too hard. If it wants to go back up to highs and it wants to continue the consolidation on the weekly Fibonacci that I have right here, so on and so forth, that's fine. This is a weekly candle in the teal with Fibonacci. We are fighting the over-under of the 1618. So it is either over or under 514.20, and we will find direction sooner than later. If we were to break into the 100, that is correct. We will come back down to the golden pocket, right? Our target is going to be 502, and for me, 498. So when this thing starts to roll pretty good, I'm going to stick to the macro short side. I think FOMC hopefully is going to be the catalyst to kick us to the downside. If not, we will stay above the 1618, and we will continue our 524.38 track down. Okay, but we have to stay above the 1618. We got to start closing now and start rip rallying back up. And I don't know if we're going to do that quite yet, but we shall see. So tune in for the next recap, and we will get into some bigger breakdowns tomorrow leading after the FOMC to get some predictions, and they should be solid. All right, guys, take care.